Welcome back to another exciting episode of Breaking Bitcoin. I'm your host, Justin Wise, lead analyst and senior mentor at Kraken Cryptocurrency. Hopefully you guys are doing absolutely fantastic today. We've got a great show for you guys today. Obviously, a lot of excitement in the markets. We're going to break that down, look at all the charts. The things we're going to focus on today, and obviously the title of the video is, Should I Buy Cryptocurrency Now? So we're going to look at a few examples we're going to look overall at market psychology in the market, how fear and greed plays a massive role in kind of facilitating the buy and sell cycles of the market, kind of the market expansion cycles and the market retraction cycles. We're going to look at the Crypto Fear and Greed Index and talk about how that has historically played a role in cryptocurrency bottoms. We're going to look at overall chart structure and use technical analysis to determine when are opportune times to spot these moments when the market does reverse. We're going to look again at Bitcoin dominance and Tether dominance and discuss the psychology between individuals moving into stable coins, Tether being the largest stable coin by market capitalization in the cryptocurrency markets. So if we look at the rise of Tether dominance as its share of market capitalization, as Tether dominance rises, it indicates that individuals are moving into stable coins. And we can look at how these two situations, Bitcoin dominance rising and falling and Tether dominance rising and falling, can have an effect on market cycles and influence our buying and selling decisions when it comes to executing our trades. We're going to look at our typical pathways to profit, which is my way of trading, the way that I teach all of our students at krakencryptocurrency.com. We're going to look at that particular analysis and see what it says about where we are in the market cycle and what possible trades we have. We'll look at some automated strategies of ours that run and look at what has been signaled and kind of what trades are being generated in this area of the market. And then we'll just kind of opine on where we think the market's going to go based on my experience and where I've been in the market and what I've done. So thank you guys for joining us. If you guys enjoyed the content, just straight up, go ahead and make sure to subscribe to the channel and hit the like button. We are here generally every day doing our live streams. We're doing a lot of work in the background, updating the website and updating all the educational content, as well as doing an indicator overhaul. So I apologize for the lack of streams lately, but this is the place to be if you're new and you guys want some good education. We're here every day and we just try to present our opinions on the market and where we think things are going. Okay, so with that being said, let's get to the markets, guys. Oh, by the way, if you guys have any chart requests, just make sure to throw those in the chat. I will get to them as quickly as I can, or a moderator will bring them to my attention. Oh, you know what? I'm so used to having the big intro scene that it's it's different in the new OBS layout that I have. It's just this scene. Okay, it's just this scene and then the other switch scene. So we're here on the markets. We're looking at USTT dominance. So let's first just start off by looking at the price of Bitcoin right now. And we will use Bitstamp as it is typically the best for analyzing the spot markets. All right, so let's keep things simple for a little bit and just move in here. We'll also get rid of this and we'll just kind of look at overall chart structure. We're going to look at VPVR here as well. But the first thing we're going to do is we're just going to look at chart structure. At the beginning of 2021, we were deep into a fantastic expansion cycle in Bitcoin's price, a fantastic bull cycle that took us from those lows of like 10,000. Actually, excuse me, depending on where you've been, because back when the markets crashed throughout 2018 and moving into 2019. January 2019, it's just kind of an interesting 2-year cycle, right? Where the price was at the lows of 3,500, and then 2 years later, January 2021. Let's zoom in on that again. I think we were at that 20. We're at the 30. Okay, excuse me. We're at the 38. Yeah. So, it's just been really cool to ride this cycle out. All right. But in January of 2021, we did a little stutter step to the downside and we established some support around the $30,000 range. 29,000, I think, was our lowest wick on spot price in that area, is actually $28,800. So January 2021, we established some support following a pushback on that bull cycle. And it was actually the most significant correction we had seen since back here in September of 2020. So a good full quarter of just price expansion from the end of September up until the kind of the middle of January. It was really the second week of January where it occurred. We do get a pretty significant correction in that area, and it did happen pretty quick. So from the peak to the lows, we did have about a 30% correction from peak to low there. 30% correction in January 2021, and then we did kind of move on with the sluggish kind of third quarter, I would say, of the expansion. We moved from 30. I mean, we 2x when we went from 30 to 60, but you know, we went from 10 to 30, so that's a 3x as opposed to a 2x. So slightly more sluggish back quarter of the market. So anyways, and again, just pretty choppy price action here. We have divergence on all three of these peaks, bearish divergence on all three of these peaks with our momentum oscillators. And then we put in a swing failure pattern, which is where after establishing a high, we establish a lower high. And then kind of the trigger is there's multiple ways to do this. If you're watching for this structure after seeing three peaks, kind of following, you know, big. So note the difference in price action here, where we just have this really fluid, high momentum expansion, and that continues up here. We also see it here, okay? But we can start to see chart structure really change right here. So if we zoom in on this, we can see that our peaks, our expansion periods, our markup periods are taking we're going less far. Okay, so we're moving less of a percentage to the upside, and our corrections, which are now coming in regularly, are happening pretty frequently. So, anyways. When it comes to kind of trade triggers for that particular trade, we can either kind of be on the lookout for a lower high after we're seeing kind of price move from very fluid to choppy. We can be looking for a lower high and use one of two strategies that work pretty well for me from the technical side, either looking for regular bearish divergence or looking for oversold conditions on your momentum oscillator. In conjunction with a lower high. So if you see a lower high and you also see regular bearish divergence or oversold conditions on your momentum oscillator, that can be a reversal entry for a trade, or actually you're trying to get into the peak and you're anticipating a trend flip. After a lower high has been established, you're assuming a lower low will be established. The other more conventional way to enter is to mark off the level of support from the low that was put in before the new swing high. So as you can see, this was our previous high. We put in a new swing low, and then we identify a lower high. And to be honest, you can identify that lower high. The first time you could have would have been right here. And the second time you would have been right here, okay? Because in this example, both of these highs are marked by two lower highs on either side. So you can't establish a high or a low without two candles on either side. This is kind of the issue with automating divergence. I wouldn't say it's an issue. It's just a known weakness of utilizing divergence. I run into the same issues using the VWAP double bounce strategy and attempting to automate it. I can manually trade it quite well, but in automating it, we need to wait for two candles to confirm divergence because you need to establish a low. And a low is something that is essential for establishing divergence. You have to have a divergence in what price is doing in reference to higher lows or lower lows, or higher highs and lower highs. And there has to be something different happening on your momentum oscillator or the oscillator that you're utilizing to identify divergence. Now, in our suite of indicators, pretty popular one to use is time transformation. It does mark out the divergence for you and identify that divergence on chart. But parallax is also extremely good as well. Parallax is going to be a combination of two momentum oscillators, the relative strength index, as well as the commodity channel index. And it tracks the differences between those two. It tracks the divergence between RSI and CCI, which is a really good indication of trend strength and when things are weakening. So, okay. All of that. All of that. So the reason I point that out is to establish the lows and the current level of horizontal support that we have. First, initially, I mean, the area that we're going to be coming up and testing, and this is kind of bigger picture. This is macro for Bitcoin as well. Just looking at the information that the charts can give us, we'll go over and look at dominance information, which I equate to as flow information when it comes to cryptocurrency. And we'll also look at some psychological information, sentiment level, crypto fear and greed index as well, and kind of how historically we've played those rules. The most interesting thing we're going to get to is probably not the divergence, but the switch in Tether and Bitcoin flow. So, but the technicals do matter, and it helps if we have areas on the chart where we're looking for. So lows established 30,000 again, and then again after the sluggish period of kind of the back quarter of the 2020-2021 expansion, we have a 50% market decline where we again continue to trade in that area around 30,000. All right, so that's pretty much where we are beginning to find ourselves again. Everyone, of course, this is nothing new. We've had a tumultuous last week in the cryptocurrency markets to the downside. So nothing has changed on the macro perspective. The last Friday, the last stream that we did, I said that the crypto markets were getting pretty close to historical levels where we did see a reversal, i.e. the crypto fear and greed index, both Tether dominance and Bitcoin dominance reaching levels of resistance and or support. Tether dominance reaching a level of resistance, Bitcoin dominance reaching a level of support. And just the overall, again, so one thing that's kind of hard, I know that obviously there's algorithms to do this pretty well, but just the way that I've always done it, because I'm still relatively new when it comes to programming, is just by paying attention to, I have several accounts set up that have different curated news feeds, all from Google. I find Google is just one of the best ways to do this. But just looking at, the way that investments are being, the way that investments and general attitude toward the market is being kind of sold to us via advertisements. Remember, anything you see in your news feed has somewhere along the line been paid for to be put there. So there is a vested interest in every piece of advertisement, every piece of information that comes across your eyes. Which is important to think about. You know what I mean? If you're, the news feed is free. So if the news feed is free, you are the product. However, I still have found it very helpful just to see, it's not this immediate thing. It's not this immediate thing where, if I start seeing lots of advertisements for cryptocurrency exchanges or get rich quick schemes or trading courses, or this is the hot new coin to buy, which is pretty common. It's not as if once I start seeing that information or those kind of advertisements, it signals that the market's coming to an end. The market can continue to be irrational longer than you can stay solvent, in the words of a famous investor. But it is helpful to see. So very similar, when you start seeing irrational exuberance in the news, it's often a good signal that, it's time to start taking profit in the market cycle. Which is always, taking profit is always an imperfect art. So if you guys struggle out there with taking profit, don't worry about it. It's probably the most difficult part of trading. All right. At first you think that it's just your entries. Entries are, I don't know, after you've practiced for a while, or if you're just consistent, like even if you're consistent with something that's kind of half okay, you're going to do better than most people just randomly buying and selling in the market. Just because you are doing something consistently. So conversely, when I start seeing a lot of advertisements or a lot of information about how kind of the bottom is essentially not in and we are going to continue much, much lower, it starts to make me think that it's probably a start time to putting entries in. So okay, so this is a relatively simple concept. The only thing I'm trying to express here is that we are coming up to a level where liquidity has stepped into the market previously, and we have seen pretty significant bounces from this area. Now, I I lived through. I was actively, I was active at this. I was streaming when it happened. I've been doing this for quite a while. In 2017. Kind of a similar situation occurred where we corrected significantly from 20,000 all the way down to 63,000 or 6,300, excuse me. So more than a 50% correction. But when we bounced pretty mightily off that area multiple times, formed this big descending triangle, and then finally broke down. I was live on this day too. I was live when we broke that 6K support, and I was wrong. I thought that we were gonna, at that time, I've evolved as a trader since, but mistakes happen. I thought that we were gonna bounce from that area, and I had multiple successful trades from that level to present itself as an obvious level on the chart, and then we broke down. So, huzzah. So we saw something similar back in 2017 is all I'm trying to say. There is some interesting information from Glassnode's, just looking at SOPR, looking at that unrealized profit ratio. So more than 30%, it's now it's like 38%, I believe. 38% of Bitcoin net positions at loss, meaning that 38% of Bitcoin's active supply has been purchased above the current price. And even though some of the like SOPR methods are getting close to the oversold levels, the fact that we're seeing kind of the biggest thing that I took away from Glassnode this week is that what we're really seeing is these price movements being pushed by short-term holders, not long-term holders. And we're seeing kind of whale activity and long-term holder activity like we saw in 2018, 2019, which is good. So what I'm saying is that we see long-term holders become most active around this area of the market in 2017. And it's sell side, it's them distributing. And we see short-term holders or individuals that hold coins for a shorter period of time, and this is retail investors. We see them become most active right here, right? We see them become most active at market highs. So this is pretty common, just market psychology. Inexperienced newer traders or retail investors are purchasing at market highs, and they are purchasing from the liquidity of long-term holders who have let their assets mark up. This is smart money versus dumb money. Okay, pretty common, pretty simple. Everybody knows this. And then I think we just get pretty good, just normal, just technical support right here where we bounce. That's the way I view it, just technical support. There's liquidity reasons for that. There's psychological reasons for that as well. But again, the same thing, all this, people, everybody kind of has their soapbox that they stick on. They say that like skew and options flows are the most, give you the most data in the market, and that, you need to look at that. You have some people that just look at fundamentals. You have some algo traders who just look at sentiment information, right? All this stuff is correlated. Okay. But all the chart is the history of a price's movement. Okay. So that chart displays the most relevant and critical information, which is what does price do? What did price do? Right. With all that information, what did price do? And it's a pretty good place to start looking for what might price do this time again, if we see something similar. So the good news is that we are seeing, hey, Jordan Stotts, good to see you, my friend. We are seeing long-term holder activity start to pick up again on chain. So accumulation of Bitcoin by long-term holders and whales. The only problem is that is not this immediate bounce. That's not this immediate entrance into a bull market. It's quite likely, as we continue to move on, like I'm of the opinion that we can have some tradable bounces right here. But this will be, keep in mind, this will be the third time we have come down to significantly test this level. So we tried to correct here, established support, pushed back up, corrected 50%, pushed back up. And now we're back down here again. And as you guys are well aware, if you guys watch me or if you guys just study trading, support can last for quite a while. So back in 2017, it lasted 5 times, with the fifth being a long period of consolidation. You could maybe say 6, maybe 7 if you wanted to, but then it broke. So the more times you test support, the more it tends to break. So we can have a bounce over here, and of course, I always remain open to change my opinions. But and I think actually we'll get into this. I think we are going to see a pretty nice bounce from here soon, if not right now. But I don't think that it's going to be this V bottom recovery. On-chain data has just kind of flipped a little bit more bearish, right? And it's just kind of, it's not like it's flipped, honestly. It's just like it hasn't flipped back. So we continue to say, just one second. We continue to see this sell side pressure being driven by retail and not by long-term holders. And we haven't seen the long-term holder activity pick back up again. And the liveliness of the network continues to drop. So with that being said, I think we are going to get a bounce from here. And we'll get into more reasons for this. We're going to talk about this for quite a while. I think we are going to get a bounce from here, but I don't think it's going to be the re-entrance into the bull market. Now, I could be wrong about that, and I'm kind of interested to hear you guys' opinion. Right? I'm not always right when it comes to discretionary analysis and trading. I'm pretty good when it comes to. Well, I'm actually really. I don't know. I guess I'm okay. You guys say I'm pretty okay. You guys have been following me for like 3 years, and most of you guys are premium members. Make money off my calls, so. Let's look at a couple things. So on Friday, we looked at the crypto fear and greed index, and we were at, I believe we were at 19 were we? I have to go back and check. Last week we were averaged 22. Yesterday we were at 11, and today we are at 13. So we are seeing a little bit of a pick back up. Keep in mind that we're not going to get, we can go back and index these days. These days are actually pretty correlated to market bottoms for peaks. But keep in mind that sometimes it can take a week, 2 weeks for this data actually to play out. And also, even sometimes when we reach peak lows, it's not necessarily the market cycle shifting, right? So here we have, let's see here, this is November 2018, and we were reaching lows of 18, 12, 10, right? And I said kind of that critical area is like between 10 and 15 that we usually see bounces on the crypto fear and greed index, or bottoms. But if you guys will recall, November of 2018 was when we were at 6K and we did drop to 35. So we still had another 50% correction in the books for Bitcoin. Some key metrics around these areas is that we did see at the real market bottoms, we started to see retail stop selling because they had run out of funds to sell, essentially. So thank you, Chemo Zabi. I appreciate that. So we still had a 50% correction, but we started to see retail supply end off of selling, right? So when all willing sellers are done selling, the market can really only move one way, as Bennett likes to say. So, okay, back to the charts. So we looked at Bitcoin. We are coming up upon support, and the crypto fear and greed index is pretty low. Okay, so far. But on-chain data still has not switched from like macro bear cycle. So I think based on that so far, the case that I'm building right now is a bounce trade from this area, and to be keeping your eye out for the entry signal for that, depending on what your strategy is. And we'll go over that here in just a second. All right. So the next thing we're going to look at is USTD dominance. So in the past, so USTD dominance is the portion of the market capitalization of the entire cryptocurrency market capitalization that Tether commands. As individuals, so there's a couple different ways that Tether dominance can increase. Okay, Tether dominance can increase because there is a large surge of new money into cryptocurrency via Tether. Okay, so if Tether mints 250 million Tether, that is going to make Tether dominance rise, assuming that $250 million increase in Tether is a substantial increase over other inflows into cryptocurrency. But the reality is that the majority, individuals might, the majority of market capitalization driven by, the majority of expansion in the market capitalization in cryptocurrency is driven by stablecoins, and Tether being the largest lion's share of that, USDC being the second lion's share of that. So the majority, people think that it's retail investors hopping on Coinbase and depositing $50 in USD and then buying Bitcoin and market capitalization raising that way. That certainly accounts for market capitalization increase, but a significant portion of new market capitalization does come from Tether, right? So Tether is very, very important to the cryptocurrency markets. It always has been. Well, not always has been, but it has been since 2017, certainly. And then I think it really established itself as like permanent in I would say almost 2018, really. Like, Tether came along just in time for there to become a trusted stablecoin to move in during an extended bear market. So that was very, very important. We really hadn't had something like that before, that you could move your fund there. I mean, there were different things and attempts to attempt to hedge and establish and secure the value of your BTC. But largely it required different markets and different exposure to other asset classes, or just really being extremely clever or knowing when to buy and sell. Tether was the first thing where you could just slide in, lock in your dollar value, and then re-engage with the cryptocurrency markets on your terms. And so for that, I thank you. Tether. Good looking out. But anyways, what is interesting is that we're going to see if we can see any kind of patterns on USDT dominance, since it is so important, and how it has kind of affected the market. So broadly speaking, the peaks in Tether dominance mark market lows, and the declines in Tether dominance mark periods of expansion. Okay, so for up September, let's see. Hopefully I'm not wrong. Okay, so here we can see. From August 2020 to September 2020, we had an expansion in Tether dominance. Okay. So we're going to assume that this means that the market was likely moving lower or consolidating. So August 2020 to September 2020. And so here we can see August 2020 to September 2020, we had a significant correction in Bitcoin's price, and Tether dominance increased dramatically. Bitcoin's price dropped 15%. Tether dominance increased 77%. And then from September 2020 down to say February through April of 2021, we have Tether dominance decrease, or I'm going to say from October to January 2021, we had Tether dominance decrease, indicating likely bullish activity in Bitcoin and cryptocurrency markets in general, and that the supply of Tether reduced. All right, so from September of 2020, so we talked about the decline from some September of 2020 to January 2021. We have nothing but green, right? Where Bitcoin's price moves up. Let's just take kind of a rough average here, 277%. And then we have a market decline, right? From January to, let's see here, February of 2021. So from January, let's zoom in here. From January to February of 2021, we have dominance increase. The market is decreasing, right? Makes sense. And then, okay, so we can even go in here and view all these little mini cycles. But more broadly speaking, we see a massive rise in Tether dominance between May and July of 2021. What happened in May and July of 2021? So here's May of 2021, and this is moving into July, right? Where we had a 50% correction. We see Tether dominance increase again, and then again down because we have that second spike, blah, 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 blah. Okay, so you guys get the point here. When Tether dominance moves up, it is a good indication that the market is already corrected. Okay, so it would be nice if you could use this as a leading indicator. And I suppose you could as a breakout indicator. It does give some good indication of market cycles, but it's very volatile. So it's kind of hard. This is really just kind of hindsight analysis. But we're going to try to utilize this in a helpful way here now. So we've gone over how declines correlate to market increases, and how increases lead to market declines. But what about support and resistance? Okay, so this is This is the high of Tether dominance. It peaked at about 4.92% of total cryptocurrency market capitalization. And the current on the books high that we have is 5.53. Okay. So between 4 and 6% seem to be, well, about 4 and 5.5% is the highest that Tether dominance has ever increased. Now, it is, of course, possible that we move higher, but it's going to be interesting to mark this level out and see very similar, interestingly, to, so these are, note, these levels of resistance also correspond to, on Bitcoin's price, the moments when we established these levels of support. So rises in Tether's price correspond to the moments when we made support in Bitcoin's price. So every time we've reached this level, we have bounced significantly. So there's a couple things that we can do with this information. One, we can use this to establish when we feel very certain that Bitcoin's price is going to break, the Bitcoin's price is going to break down below $30,000, and that Tether dominance would then likely spike above 5.53%. Hasn't done that ever before, but we'll see. So one thing that we can use is this level of resistance, all right? So if we trade higher than 5.53, let's say, then that could be a telling sign that we are going to actually break down in Bitcoin's price and proceed lower. Probably the most practical way to use this information now right now is to anticipate that we're going to see the same thing that we've seen in the past, which is that Tether dominance here is skyrocketing out of fear, and that Bitcoin's price is coming up to a level of support that has supported it before after a very violent kind of third leg down. So we've kind of got 1, 2, we could say 4, really. I mean, you could obviously go in here and like analyze all these, but 1, yeah, no, I mean, I really like the idea of this being a third leg down. It could be the fifth leg down. It doesn't matter. Kind of the key importance here, the main point is the force of the sell-off, right? And what happens. So we've had a big one here, but this was really kind of the, well, you know, we have this one right here, which kind of starts the selling. But this is significantly bigger and significantly scarier. We did see a pretty nice bounce, particularly off the low. Off the low, we saw a bounce of 23%, 24%. And so we could see something similar where off this low, we do bounce 25%, and that would only, again, come back up. This one didn't even really make it that far to test the resistance that was established. So it couldn't even make it up to the lows that were put in at the previous consolidation range. We crashed down again, established a consolidation range, plunge. Again, can't even make it up to that resistance level either. This previous support that was put in on these market lows, where we buckled and failed here. So yeah, it's totally possible to see that. But again, if we're also unable to make it up that far, then we probably only make it maybe 16. We already had that 15% bounce like almost immediately. So the market already did a 15% move to the upside. Is it possible that we continue up to that 20%? I think it's pretty likely. I think it's a good possibility given the area of support that we're in and just kind of the volume and the momentum of that last leg to the downside. All right, so Tether dominance at an area of resistance. You can utilize this as confirmation for a reversal trade in this area, or you can use this as confirmation if we are to trade above 5.53, that the market is likely going to continue breaking it down lower. The only kind of bad thing about using this as an analysis in that sense is that it might coincide, like the candle where we break 30,000 is the candle where we spike above 6%, because Tether is a little bit of a lagging indicator rather than a leading indicator. But it's just good to see this and look at this. Now, Bitcoin dominance, on the other hand, this is something that's interesting. And I find that looking at Bitcoin dominance helps. I find that looking at Bitcoin dominance helps because it just correlates all the information that you would get from, again, you could get very granular and look at all the data available on Glassnode. But the reality is that Bitcoin dominance just kind of gives you all that information in what the market is actually doing right now and what it has done in the past. So what do we see with Bitcoin dominance? Again, something very similar to Tether, but in reverse. We are coming up upon that level of Bitcoin dominance support that we saw established in May, September of 2021, and January of 2022. So let's look at May of 2021. What happened in May of 2021? Market lows. This is the last time we established that level. Can we go back? Let's see here. What is this? January 2018. is the previous low below that. Excuse me. Oh, well, yeah, down. That, you know, that's a little different. In January of 2018, you know, I guess that is an interesting correlation. So in January of 2018, we saw the biggest hype for altcoins that we'd ever seen prior to that. Yeah, 2018, man. January 2018 particularly, geez. So in January of 2018, we saw the largest demand, I think, for altcoins that we'd ever seen. That was the top of the retail market cycle. And, you know, just the demand for altcoins, everyone trying to pile into the next, you know, well, I guess, you know, depending on just Ethereum, really. Ethereum, XRP, Litecoin, Zem, Stellar Lumens, Steemit, Tron was really big in 2018. And so one could say that we could correlate. Gotta get rid of these drugs. One could say that we could correlate the December or January 2018 with like these areas, like both of these areas, like the demand for Shiba Inu. Oh, I remember Dent. Yeah, the coin for dentists, man. Yeah, dude. 2018 was the year of the ICO. You know, 2018 was pretty good to me. I was, you know, I took a pretty good strategy to participating in ICOs, and I took a pretty good strategy to trading in that area. And 2018 is, 2017, the last quarter of 2017 is when I really started margin trading Bitcoin, originally on BitMEX, and then I moved to Deribit. And then I ended up at Bybit, which is where I've been ever since. It's the best exchange I've ever found. Anyways, okay, so let's go back to Bitcoin dominance here. So Bitcoin dominance at support, the same support that we established in May of 2021, September of 2021, and now we are at that level in January of 2022. So just zoom in here. Sorry, guys. So May of 2021, September of 2021, and here we are at January 2022. All right, which means that, as we saw, Bitcoin dominance decreased while Tether dominance increased. And now what do we see? We see Bitcoin dominance breaking out of that support level and pushing on up to the upside on high momentum, on good momentum. Okay. I think this is relatively significant. Again, just another kind of, we are at a potential market low. So we've got a couple pieces of data here. We've got Bitcoin's price overall entering the support area that we established in January of 2021 and through the bottom of the market in 2021. Excuse me, I guess the second time we went down there, through May through July of 2021, the summer blues. All right. And we're in that price area again. We have come down to this price area on a big red candle with high volume, high momentum. And now we are really, after establishing the lowest low today, we've had a 15% correction, and we've had a big buyback, and we have a long-legged doji. All right. This was actually looking even a little bit better. The hammer candle that we saw here was good. Now, looking at our technical indicators, we can see that Paralox is oversold. Typically, when Paralox gets oversold, we do see a bounce. We can see here all the last bounces were preceded by Paralox being oversold. We haven't had a really huge big one yet, especially if you're not able to get on the lows of these wicks, which we're not. Like, that's just not our trade. But we've got a 12% trade from peak to trough, and we do have an 8% trade previously. All right. Now, keep in mind, though, I think we're probably going to get a larger one here. And we also have regular bullish divergence, finally on time transformation, with two buy signals preceded by each other. Now, remember last Friday when I talked about what I want to see for the market to correct here. And I talked about the crypto fear and greed index getting a little bit lower. And then I talked about funding and premium. Okay. So spot price for Bitcoin is this indicator measures the yellow bars indicate that the difference between the price on the futures exchanges and the price on spot exchanges. So if price on futures is above the spot price, that means if you're buying or trading Bitcoin on futures, you're paying a premium because you're actually buying higher than Bitcoin actually is on the spot markets. Conversely, if you are trading Bitcoin when it is on the futures exchanges, when it's trading lower than the price of Bitcoin, then you're trading price in backwardation. The price on the futures exchanges is trading lower than the spot price. And there's some interesting information to take away from this. Typically, after you've traded in contango for quite a while, you can get a movement to the upside. However, as I said on Friday, that's not the most important thing that I look at. The most important thing that I look at is funding. So funding is, yep, Kimozabi, yes, that's contango and backwardation. Yep. So funding is very important in the cryptocurrency markets. So funding, because regular futures contracts are not the backbone of the cryptocurrency derivatives markets. Futures aren't the backbone of regular financial markets either. Some like commodities markets, I would say, certainly. But in cryptocurrency, we don't really have regular expiration futures. We do. But even okay, so futures are regular expiration futures are pretty important in commodities, and they're pretty important in global markets everywhere. But they're not as important as they are in cryptocurrency. The inverse perpetual swap contracts are. And one of the key functions of the inverse perpetual swap contracts is the funding rate. Funding rate is it's their incentive model to keep price aligned with the spot markets. So if the price on futures markets is higher than the index price, okay, then funding will be positive, which means longs will be paying shorts. So longs have to pay shorts the privilege of holding their counterparty risk, essentially is how it works. If funding is negative, it means that shorts are paying longs, and that essentially shorts have to pay for the privilege of having longs take the other side of their trade, their counterparty risk. Because on futures exchanges, there's always one long to one short. But the difference I would say, is that, the difference is in leverage, right? So although there's always one long to one short, the quantity of longs, the margin that is backing that total open interest is different for longs and shorts. And that's really where you can see the strength of the market play out. Like, what side is more risk on? If there is more risk, if there are generally, if you see funding's generally positive because funding is generally positive because Bitcoin on average is an appreciating asset. So typically, anytime, you can look at the historicity of this, you can just see here, funding rate has been historically positive. You can see this on Glassnode as well. When funding is high, when funding is positive, it means longs are paying shorts. But If price is going up, then that's just the cost of doing business. Now, big spikes in premium, right? Big spikes in premium and big spikes in funding can often indicate reversal signs. So we've talked about this a lot in the past. When you see a large spike in funding and when you see a large spike in contango or backwardation, can often indicate that the market's about to reverse. So I've done this analysis before with market bottoms. We do see big spikes in negative funding correspond with market bottoms. And we do see, along with those big spikes in negative funding, they almost always happen with backwardation as well. So anyways, we can see funding finally flip from positive to negative here. And we have done that before, but backwardation continues to rise. And we are kind of now at that level of support that we had talked about earlier. So anyway. Well said, Kimosabi. You can also get the information on Glassnode. Yep. You can get the information on BitMEX. You can get the information on Glassnode. You can get the information on any exchange. Okay. Let's see here. Yes, we talked about Bitcoin. Okay, so in summary, what do I think is going to happen? I don't think that the macro I don't really think that the macro situation for Bitcoin has changed. I don't think that this is the absolute market bottom, but I do think that we bounce from here, at least 8 to 12%. That would repeat what we've done previously, and maybe more. So I think there is a potential dry powder entry here, and I also think that there is a potential reversal bounce trade, potentially a reversal baseline bounce. So having said that, let's look at PTP, which is the way that I trade systematically, and we'll see what kind of trade we have. We'll see what PTP has to say about this, because it says something different from the discretionary analysis that I just did. All right, we went over the. Apologies, my indicator's taken. There we go. So we went over the trades that have been put on since November 2021. When we break down below the 26 Dawn Chain channel, actually this is the Dawn Chain V2, so this is the Kijun V2. When we break down below that, which I'm currently using as my baseline, 26 length period right here, Dawn Chain V2. We enter into a bearish trend. We have, at that same time, we have Parallax flip negative on that same candle. We also have the entry signal from time transformation as a centered oscillator on the previous candle right there. And we also, again, have, if we're using Wadatar explosion, we also have that confirmation with the rising explosion level throughout that whole period. And again, so trade here, we get regular bullish divergence on this candle, which is a potential entry signal, but we really don't get, and then we of course have price crossing across the baseline, but we don't really get an exit signal, our oversold signal until down here. And we talked about the last time we did a stream, on Friday. Actually, no, this was like Thursday. Let's see here. First. Yeah, we said it here, and okay, I remember what I was saying on stream. The market analysis that I posted in the Discord at this area was pretty clear. I said shorts can be maintained. If you don't have a short open, you can put one on. You can wait for this. We talked about this as well. So this is time transformation crossing below the signal line at below zero on the centered oscillator, and also below the baseline. After we're already in an established bearish trend, that's a continuation signal. That is a signal that you can enter into another trade in the same direction. And that would have been pretty profitable. And we do have the exit signal on the previous daily candle. You could have held in for a little bit more upside, trying to catch this wick to the downside, but overall gave you a fantastic exit signal. Clocked you in for a trade of 14%. So absolutely cannot sneeze at that. Okay, so if we see a bounce pretty much like we've seen on the previous bounces, then we can look for a price target of 39,973, maybe 40,357 pretty reliably. I would shoot a little bit below that, and keep in mind that channel, that level will change as price evolves. So you always want to be shooting for the level and adjusting that every day if you're doing a reversal baseline bounce trade or revert. So this is not a reversal baseline bounce trade. This is a reversal baseline bounce. This is a reversion to the baseline trade. So this is a reversion to the mean strategy. You're saying that price is oversold or price is overbought. I think that the momentum in that direction has failed, and I want to take price back to average price, essentially. So reversion to the mean. So you can use Bollinger Bands for this. You can use the baseline. You can use your momentum oscillator. Pretty common ways to do this. Probably the most classic way to do this is to look for price piercing the opposite side of the Bollinger Bands or the Dawn Chain channel. And then using that in conjunction with an oversold signal or an overbought signal to take it back down to kind of the basis line if you're using the Dawn Chain channel or the simple moving average if you're using the Bollinger Bands. Okay. Okay, so taking that out, so we talked about the kind of the reversion to the mean trade, or just the I would say rally, you know what I mean, essentially. Just the rally of price moving to the baseline. If we're looking for a breakout trade, if we're looking for price to significantly break up to the outside, I would put the percentages pretty low on us going significantly above this level that we established over here. Again, I don't think that the macro headwinds have really changed for cryptocurrency. Now, I'm definitely not on. I'm definitely not on the Uber bear train, where I think that again, which is odd for me because I typically kind of am, but I don't know, maybe I just got more positive over the last year. But I think that the market, so largely the broader global market, is pricing in the rate hikes. We are in the so keep in mind, like, people don't realize this, right? As emotion driven and as erratic as global financial markets can be, they are the most efficient vehicle for price discovery that we have on planet Earth, right? Everybody kind of everybody has their different opinions and everything, but I don't know. There's thousands of ways to make money out here, and there's thousands of ways to lose money too. But essentially, I think the market is already listen. Historically, when we get rate hikes, the market performs well, and there's none of that information in mass circulation. Historically, when we get rate hikes, the market moves up, because once the rate hikes are actually here, the borrowers realize that, oh my God, like, the cost of doing business is not that really bad. It's not that bad. It's not as bad as I thought it was going to be. So the market is already pricing in, is already correcting in advance of the rate hikes. When the rate hikes actually get here, I think we'll see a significant reduction of all the sell side pressure. And everybody's got different opinions too. People always say this around like January, is that like tax harvesting and tax selling is significant fuel for the market. Listen, there's just not enough. I've tested this stuff. There's just not enough. Thanks for the follow, Remained Young. I appreciate that. There's not a lot of, historical evidence that it's always tax loss harvesting. You know, that occurs in November. You know, historically, anyways, is what they say. November being the worst. November is historically the worst month for the stock market. He says, I only came here to answer your stream title, and the answer is yes. Good, man. Good. So I think that the market is already pricing in rate hikes. Cryptocurrency is still considered a high risk asset, but the I guess I don't want to rehash just all the technicals that we just went over. So, yeah, I'm not of the opinion that the market absolutely gets slaughtered once the rate hikes come in. I'm of the opinion that the market's getting slaughtered now because it's pricing in the rate hikes, and when the rate hikes actually come, it's buy the rumor, sell the news. Right? In this case, it's sell the rumor, buy the news. Man, got some negative people on Twitch today, man. Okay. Oh yeah. Okay. So what do we want to see though for a positive breakout? We do want to see price close back above the Dawn Chain channel. So let's pull up my data window over here. It's currently coming in at $40,261.45. We want to see Parallax cross above the zero line and turn bullish. We also want to see time transformation cross above the zero line and turn bullish as well. We need to see Wadatar explosion flip from negative to positive. So none of that's happened right now. The system is telling us that we're still in a bearish trend. However, we can discretionarily see that that there's good evidence for a local bottom. Thank you, Chili Lime. I appreciate it, man. No, there's no facts, man. It's just, you know, it's arrogance and you know, it's arrogance, man. You know what I mean? I don't waste, you know, if I come across if I come across analysis, and I come across a lot of like garbage analysis in the markets that I don't like. There's a lot of garbage on YouTube. There's a lot of stuff on TradingView. There's just a lot of noise. You know, I don't take the time to tell the guy that he doesn't know what he's talking about just because he's talking about stuff that I don't agree with or that I don't understand or that I don't like. You know, yeah, it's pretty simple, man. No, there's not, man. I know so many traders. There are traders, there's pure quant traders, there's traders who are pure discretion, there's degen gamblers, there's certified market technicians that work for they work with their Bloomberg terminals and work with their you'll see them like post videos for Fidelity and stuff. These people make quite a bit of money and they're often right, you know. They're often wrong, but no, there's no the only secret to the financial markets is establishing an edge and executing on that relentlessly, right? That's the way to make money in the markets. It's finding an edge and then executing on that relentlessly and consistently and systematically, right? So we'll look at Ethereum. What's my take on Elliott wave theory? You know, I don't like Elliott wave theory. You know, here's an interesting thing. So I think one of the big things that maybe one of the big reasons I don't like Elliott wave theory is because when I really got into trading crypto in 2017, when I kind of really moved over from Forex, there was this guy, I can't think of his name. I'm sure you guys know him. But he was Asian guy, and he was big on Elliott wave. I can't think of his name. Anyways, you know, I had previously just traded systematically and algorithmically in no, not right. No, this was a young guy. He's a young Asian guy. I can't think of his name. He's like, he tried to start posting some stuff. You know, Elliott waves are interesting. I just think that they're not Bitcoin fund manager. He's another type of awful. I guess in my opinion, I shouldn't say. I don't like to say negative things about other streamers. You know what I mean? At least they're doing something. You know, trending fives, the correcting three. You know, listen. As with all things, there's some elements that can be pretty useful in Elliott wave. Phil Acone, yes, there you go. Thank you, Cornholio. That's right. Yeah, Phil Acone. There are some elements in all types of trading that can be helpful. You know, there are you know, depending on where you sit with technical analysis, there's studies out there that say that technical analysis doesn't work, and there's studies out there that say the technical analysis does work. But if you essentially ask, and it's, you know, you don't see the kind of technical analysis that you'll often see on YouTube, for example. But you know, hedge funds, most quantitative trading strategies are built in some way on technical analysis. So likely technical analysis works, right? Essentially, at the end of the day, like, only one thing really matters. Can you, well, I guess it depends. As a trader, can you consistently return profit? I think it's probably better overall in the crypto markets to look at it from the realm of an investment and kind of look at the growth of your portfolio over market sizes. Can you capitalize on market cycles from, you know, over 2-year periods? I would say it's relatively easy. It's relatively easy in cryptocurrency to lose money in the space of 1 year. But it's relatively, I would say it's kind of hard to lose money if you stay. It's hard to lose money if you stay into crypto for just 2 years, even with just a pretty passive, like, holding strategy for the most part, at least, you know, as long as I've been in cryptocurrency. We've been pretty lucky. We haven't, you know, even with the 2-year, 18-month bear market, right? 18-month bear market. Cryptocurrency has been incredibly forgiving. And that's, okay. Give me a second, guys. Listen, hearts. No, I'm just gonna. I'm not gonna ban you, dude, but I'm gonna time you out, dude. You're just being really rude, dude. You know, like just chill out, dude. You know, it's been oh, okay. Oh, there it is. There. Okay. It's all good, guys. You know, everybody listen, I didn't ban them or block them. Just, you know, you're not gonna you can't call people stupid, you know? You can disagree with me all you want. Just don't you ain't gotta call the bot stupid, man. And bot didn't do anything to you, all right? So just keep the chat respectful and nice. You know, listen, you don't have to like me. You completely disagree with whatever I say. I don't care. You got RECT, RECT, REKTCT. Find out how much you can lose. I'm sorry, I don't mean that. I just mean, right? No, I talk like, listen, you know what's funny? Like I talk about this too, right? Like I like, I got a quant friend, you know, and he talks fact. He you know, he talks smack to me because I utilize a discretionary technical analysis with my investments. When it comes to my trades, you know, I just do PTP, but you know, he's got that. I talk about this in Pathways to Profit about the price action bros. They can be really arrogant and they think that indicators are terrible. So this is typically what you'll hear is in kind of the price action bro camp. So this is going to be just looking at the naked charts, just using kind of horizontal support and resistance typically. And this is how, you know, this is how real money traders trade as well. A lot of them trade that way. Flow information is very important. Kind of looking at order flow is pretty important too. But again, price tends to respond around recent and important levels of support and resistance. This is pretty common. It's pretty common. So, you know, I'm getting a lot less delay on Twitch than I am on YouTube. That's pretty cool. Anyways, I appreciate all the views, guys. Okay, so we're kind of getting late in the tooth here. Yeah, we're getting late in the tooth here, aren't we? So we've talked about Bitcoin for an hour. I always do this, right? Let's move over to Ethereum. Although again, not too much to say here with Ethereum. Same thing, same similar kind of thing that we're seeing here with Bitcoin. Obviously, the cryptocurrency markets are heavily correlated. I'll go to the crypto compare and kind of look at the correlations between ETH and Bitcoin. They've diverged a little bit this year, but not significantly, and they're certainly not diverged now. We have oversold parallax. We do have the green dot of life, oversold conditions on time transformation, as well as a peak bar on Water explosion with rising volume. What's kind of interesting, and one interesting thing I see is that the explosion line will start drifting up and turn yellow if the Bollinger Bands are separated. That's the way the indicator is programmed. So although every moment in the market is unique, typically after you've had multiple waves of if I said no, so I definitely don't think that quant traders hate indicators. Most quantitative algorithms are going to be built on indicators, which are all built on price, right? So everything's built on closing HLC3, OHLC4, HL2, whatever kind of price typically. I mean, really like, do I have to, I'm not going to sit here and like argue splitting hairs, man. Of course, some indicators are built on volume. All right. When somebody is like always looking to nitpick and look to establish a fight, you can kind of see like what their vested interest is. So back to what I was saying. Yeah, so oversold conditions on parallax, oversold conditions on time transformation. No, it'd be all good. Listen, I'm a big advocate of free speech. Most of the time I come on here, that free speech is really nice. Sometimes it's going to be negative, man. It is what it is. It's all good. This is, I'm not going to lie. This is kind of the nice thing, though, about doing pre-recorded videos once in a while, as opposed to the live streams. But it's all good. I like it. It's cool. Come with it. Yeah. Right? Right. Yeah. The temper of the chat is heavily correlated to how price moved up. Okay. So, anyways, let's get into some like actual trading, guys. Let's get into some trading. Let's go over to. All right, so we've got the super duper DEMA strategy running. This is the strategy that's trading my money. This is also the signals that are going into Discord for the super duper DEMA strategy. For Bitcoin, let's actually go to the 3 hour. All right, so we're still in a bearish trade for the super duper DEMA strategy. We went short back on the 14th of January, and we have held this position open until now. This trade will close if price was able to close above 37,343. So still in the short on Bitcoin. So this has been running for 2 months now, and it's only signaled 2 Bitcoin trades, both of which have been successful to the downside. Our short bot's been killing it, actually. So 27% ROI on the short bot since the super duper on Bybit short pairs that we're paired to. It's 11 pairs on the Bybit USDT markets. It's been doing really well, man. And the long bots have not really been firing. Now, not as frequently as the short bots, which is really good. Like I've built these, I've built a lot of trading strategies, but this particular one, it's very simple. It doesn't use the 4 indicators that I normally utilize. It doesn't utilize the It doesn't utilize an exit indicator. It's just a very simple 2-indicator strategy. And it's just been performing really well. And probably the nicest thing that I've liked to see is that the longs have not really been firing very much, and that even when they do fire, they've taken some L's. But the long bot's only down like 4% in the same time period that the other's up 27. So just really good returns so far. And I know the market's been really volatile, but yeah, thanks Top Hat, I appreciate it. So still in an active 3-hour short on BTC. Let's go over to the Bybit markets and look at ETH. Still in an active short. We're actually pretty deep in the profits on this one. We do need price to close above 25.18 to close that trade out. And yeah, let me go to Discord. Okay. Yeah, we just had successful BTC short. Yeah, see the Bybit buys are winning, but they're not even really taking these trades. So yeah, we haven't had anything over the last 5 days on the Bybit buy signals. The bottom feeder bot did pick up today with Bitcoin. So bottom feeder did signal for Bitcoin. That's cool. So bottom feeder is the most successful strategy that we've built over the last 2 years. And so let's go take a look at that. Yeah, cool. So bottom feeder did signal yesterday and the day before, calling for a price target of 38,000, stop loss at 32. So we did not, let's see here. Yeah, cool. Yeah, we just barely missed that stop loss too. That's really great. And honestly, so let's go look at, let's see here. This will be interesting to see. 15.29% in one daily candle. But no, I don't want Coinbase. I want to Bybit. Yeah, but on the derivatives markets, look at this, right? Only a 9% move on derivatives. So, no, I don't really like chart patterns, Henry Hawk. I think technical indicators that are based off like momentum and stuff tend to work pretty well. Those are the strategies I built off. But, you know, sometimes I'll draw chart patterns on there because they're just good and helpful for visual reference. They usually encompass the broad idea of what your trading strategy should do in that area of the market. But measured moves and stuff like that really don't work for me. I've never had any success in them anyways. Yeah, Andrew, you're still trading commodities, aren't you? You said you had done something different. Okay. Let's see here. Good, man. Good. Stopped rotating in and out of tomb forks. Let's see here. We talked about Bitcoin. We talked about Ethereum USD. Do we have the... Yeah, let's look at the double VWAP bounce strategy here. Oh, cool. We actually are in an active short for the double VWAP bounce strategy. Let's see here. We took the position on this red candle and then just increased our entry on the last 5-minute candle, looking for a take profit target of 35,312. This is on the BTC USDT perpetual contract. You guys can see we have the bearish divergence. Boom, really nice. So bearish divergence is active throughout this whole period. And then we get that Heikin-Ashi close down below following that bearish divergence and price peaking above. So that's the trigger. If we go down here and look, Let's see here. Very cool. We have an entry here as well. You can see if I get rid of volume. Sorry, guys. If we see rid of volume, you guys can see that green candle right there below the black arrow, or the green triangle below the black arrow. So that is an entry. And we nailed that trade as well. The stop loss would have been not hit in that case. So that's good. So 2 back-to-back winning trades on the double VWAP bounce strategy. And here's another one right here. This is pretty cool. Entry here that gets stopped out, but then we catch this one and doesn't take a trade because we're in the timeout zone. And good. And yeah, good. Sweet. Okay. So for all the day traders out there looking for a price decline to 35,312 the next hour or so, it's about 1.57% to the downside on BTC. An iron's belt, an upside down cup. It is like, yeah, it's like astrology, man. Alex81SG asks, for the super duper DEMA, do I move the stop loss to break even after hitting the first 50-50 take profit target? So what's interesting is that, so the strategy that is going to Discord is using all in, all out. So the strategy that's running automated on my account and that's going to Discord has one fixed 100% take profit target and one fixed 100% hard stop loss target on the exchange. And you can, because I made the strategy tester, you can account and test for all that, right? So in the strategy settings, you can select exactly how you want to do this, and you can see what's going to be more profitable for you. The most profitable super duper DEMA settings, usually, honestly, the most profitable trend following settings ever are usually going to be to use a wide stop loss or no stop loss, which you don't want to do in real trading. Like you do, like your back test shows and you're like, oh, I would have made the most money this way. But then you got to look at your drawdown, your max drawdown, your drawdown over time. You don't want to not use a stop loss. If you've got something that's just hitting the stop loss all the time, but that's profitable in other periods in the market, you just have to figure out when to switch it on and when to switch it off. You're never going to find a perfect market regime filter, but you can do your best to initiate the bot or initiate the strategy in areas of the market where it's likely to do well. So generally, like trending to the upside on cryptocurrency above the 200 exponential moving average is a pretty good filter. Bollinger Band separating is a pretty good filter, but you kind of got to smooth it out a little bit, which is one bad thing about it. But using a fixed take profit. So if you use a fixed take profit, you're going to have a much higher win rate, but you're not going to let your trades run. So the most profitable settings that I've found for this strategy is to not use a take profit, not to use it to not use a fixed take profit in the marketplace, and to use the same entry signal as the sell signal, right? So kind of, it's not going to flip constantly back and forth between long and short. Those are generally terrible strategies. Because we have the second level of confirmation in here. We do have the 200 period double exponential moving average that is filtering entries to the long and short side. So, yeah, if you disable the take profits and utilize the super trend sell signal as your exit, you're going to get the most net profitability, but you're going to get a lower win rate. You're going to get a higher win rate and about, depending on what market you're in, about a half potentially of that projected ROI or your historical net profit. Excuse me. If you use the 50-50 profit taking model, I think that as you develop the strategy, you're gonna see, but in my experience, trend following trading, not using a fixed take profit does generate more profits for you in the long run if you know exactly when you're going to exit it and you consistently exit on that exit signal. If you're starting out though, and certainly when you're building your first strategy, the 50-50 profit taking model is really hard to beat. That's what I still use for all my discretionary trades, where I take profit at one ATR, move stop loss to break even, and then use an exit signal. Another very popular one is to just trail a stop at that level. And you can do all this with 3 commas now, which is pretty cool. I mean, you can do it manually, but you know. All right, guys, listen, it's 12:26, man. I've really gone for like an hour and a half, which is good, I guess. But I got to actually go do some real trading. Yeah. Okay, so let's do market summary. Market summary. We talked about alts. Don't have any breaking news. So we'll just do, we'll keep breaking news up there. So overall, market summary is, I do think that we're going to see a tradable bounce from these levels play out across the daily time frame. So maybe 3 to 4 days to the upside. But the macro headwinds have not switched, okay? So I'm not calling the market bottom here. The crypto fear and greed index is really low. USDT dominance is at historical resistance. Bitcoin dominance is at historical support. And we have kicked up off of that historical resistance, that historical support in Bitcoin dominance, and broken above the daily baseline on that asset. So, or at least on that piece of data. So, I think that's important. I think that I think we see the market response. We see big buys step in, 15% price movement in the spot markets. It's less liquid, 9%, 8% to 9% on the futures markets because they are actually more liquid. So it's a huge switch. You often see the crazy scam wicks on. You would expect to see them on the futures exchange, not on the spot exchange, but we're seeing them on the spot exchange and not the futures exchange. So, we've got a lot of bottoming signals. We've got time transformation buy signals. We've got regular bearish divergence, and we've got negative funding and pretty high backwardation for the first time. So, so I think we're going to see a tradable bounce from these levels. When it comes to trend following trading PTP, we don't have any signals right now. So again, we talked about this. We talked about this in a little bit in the premium mentoring. We couldn't get to the full segment, but the nice thing about what I love about Bybit, the USDT perpetual contracts, is that you can be both long and short simultaneously. So if you have your short positions already open, and even better, if you're in stable coins or you have a significant holding in stable coins, it doesn't even really matter. You know what I mean? But I don't know what I mean by that. Sorry. So the best possible scenario is that you're in stable coins and also have a short open. The last time over the last month, 2 months, the dominant direction has been to the downside. So just holding shorts open in this area have put you in a profit unless you entered over the last 3 hours, right? You're in profit unless you enter over the last 3 hours. Yeah, that is an owl on my finger. Let's see here. I do. Yeah, Kimozabi, I do trade. It's not as frequent that I have to do manual trading nowadays. I will be here. You know what I mean? So most of my manual trades are going to be discretionary right now, followed by devil hand sign. No, it's just an owl. Buy Shiba Inu. Listen, so Whale Watcher, Shiba Inu is still like one of the let's actually go check. Oh, shoot. It's not, yeah, I need, let's see here. No, this isn't it. No, I need I've got it on. No, I don't think this is it. No, there is a website. I have it on my on my laptop. Who is it? Whale Stats? Yeah. There we go. Okay. Yeah. So we can see here that Shiba Inu still represents 13% of the total holdings of the Ethereum whales. So FTX number one, there's a reason for that. The FTX token gives individuals access to their launchpad, also gives individuals access to lowered trading fees. So we can see that a lot of Ethereum whales are doing a lot of trading. And then USDT. So Ethereum whales are only 10% tethered, which is pretty. So yeah, this has been a helpful website for me in the past. Although it seems like they've changed it a little bit. This is it. I guess I'm just used to looking at the mobile version. Yeah, that's what it is. Okay. So whalestats.com. Analysis of the top 1,000 Ethereum wallets. Yeah, I mean, you'll get Phantom. I'm doing a lot of stuff on Phantom lately. Australia token FUSDT, Spirit. USDC is the largest holding over there. Not surprising because Spirit Swap has ridiculous APRs that they're offering right now for stablecoin holdings. Anyways, with that being said, guys, we're going to go ahead. Same thing. Tradable amounts on Ethereum as well. The bottom feeder is going to be calling for that too. Yeah, bottom feeder calling for 2658. Stop loss at 2042. Okay. I'm sorry we didn't get a chance to look at a bunch of requests today, guys. I got a little sidetracked in the chat, but it's good to kind of chat with you guys and come up with some good ideas. I'm going to go work on a little bit of a training strategy that I've been working on here, and I'm also going to kind of finish up the premium onboarding stuff that I'm finishing up. So we will be back tomorrow. So let's thank you guys for joining me for another episode of the Breaking Bitcoin Market Update. My name is Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. I'm also a proprietary trader. I trade my own account. If you guys have any questions, feel free to leave them in the comment section down below. Let me know what kind of material you guys want to see coming forward. I am thinking of new stuff to do for pre-recorded content, tutorials, kind of how-tos and walkthroughs. So let me know what you guys would like to see insofar as that. Otherwise, any other questions, comments, concerns, sarcastic remarks, and our death threats can be left down there in the comments section down below. If you guys are interested in anything that we offer from KrakenCryptocurrency.com, so we provide live buy and sell alerts from our automated strategies. We also do provide our traders and analysts discretionary positions and signals. We provide our premium market analysis, access to our Discord. We have our proprietary indicator suite comprising over 10 indicators that we've developed to utilize the market, as well as access to our online trading academy, the Pathways to Profit course, all of the additional features, plus access to our bots and all those other kind of cool stuff. You guys can get all that. If you have any information or if you have any questions, you can check that all out at premium.krakencryptocurrency.com. And until next time, guys, subscribe to the channel, hit the like button if you enjoy the content, or give us a follow over there on the other streaming services like DLive and Twitch. And we appreciate it. It lets us know that we're making good content. Otherwise, we'll be back tomorrow, same time, same crypto network. You guys be good. And just trade safely. All right. Cheers, guys.